The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis, from the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania. And we take a look at the German DAX, which I cannot believe with that three-drive pattern did not fail and explode to the upside yesterday like the rest of the market. I was shocked when I saw that. And then also we see the FTSE lagging behind just a little bit. Folks, believe it or not, I got another email from the dude that said this GameStop was a bunch of baloney and these numbers don't work at all. And I said, young man, I said, you're probably right, but just because I've been very busy today, I said, let's just take a look at it. This was after the close. So what we had looked at yesterday, if you remember, we had looked at the ABCD structure in the GameStop. Now, not that it's very volatile or not, but, I told him it'll go somewhere between the 618 and the 786, most probably, I said, on this next move here. And by golly, just take a look and see what happens. But what you're going to see after that is what's really shocked me, and get this up here and take a look at it. This is really unbelievable, folks. If you don't believe Fibonacci numbers, at least take another look at it, for God's sake. I mean, this is hard to believe. Look, it went all the way up, folks, to the 78% level, $2 higher. Oh, actually $8 higher at 348. The number came in at 349 at 353. Oh, let's get this right. The number came in at 335. The market went to 342. Then what happened is just hard to believe, because if you think you shouldn't use stops in these markets, just look what happened to GameStop after that. Let me get it up here and show you. This is just. Get this up here 1 second. There you go. After we hit the 78% level up there at 348, it dropped in half, folks. Can you believe that? In 1 hour, it dropped in half. It went from 340 down to 170 and then back to the 61% retracement up to 280. That means we got an ABCD that's going to take us down to 120. I mean, you talk about volatility. I mean, I haven't seen anything like this since I think it was Broadcom. What's his name? Mark Cuban's company was that crazy. During the last few days when it was before it was being bought out by, I believe, Yahoo, I think that stock in one day moved like 500 points in one day, up and down. I mean, just unbelievable. Anyway, that's why you've got to protect yourself, folks. I know the Read It boys are there. They had the fellow on from Bloomberg last night, and I was able to listen to him. Nice young man. He's the one that started Reddit, and he said he wanted to give the little guy a chance, and he's right on all those things. But they gave him 1/2 hour of prime time in the evening. And I thought that was really good. It was very interesting to listen to him. So you've got to pay attention to what these guys are doing, because, this is important, because they get started on these stocks, and boy, once they push it, it really goes. But the thing is, they're the public just like anybody else, and they're going to follow these numbers and patterns. So that's the key. I think if you've ever doubted Fibonacci numbers, just looking at GameStop would say, gee, maybe there is something to this. But for the stock to go from 348 down to 170 in 1 hour, get out of here, man. Those, if you can do the options right on that puppy, there's serious money to be made there. Therein lies the key. I'll bet you the premiums on that stuff is absolutely incredible, but we'll have to wait. Anyway, here's where we are, folks. We're back up against this big number here. We're coming in. We're in the new moon season right now. By the way, we have Norm Winsky today as our guest, but I still believe we're going to hold that last high at above the 340 level. That's my assumption. But the real craziness, folks, is in the Dow Jones. I mean, to see the Dow Jones up almost 550 points yesterday, and the Nasdaq being down, that is a huge rollover. That tells you that they might reverse and play catch up today, but this is the same thing that we saw in 2000, only it's reversed. During 2000, the NASDAQ was going nuts, heading towards 5,000, okay? And the Dow Jones was already rolled over. It rolled over in January, but it wasn't until March that the the NASDAQ rolled over. Now, that date's coming up. That date is March 24th. Remember it very vividly because there was a money show in San Francisco. I gave a speech there, and I said, be careful, folks. There's a train coming down the track that you do not want to stand in front of. And I can tell you this, when you're not involved in something, which I'm not involved in these things. I scalp them a little bit during the day, but for a big position, I haven't done anything like that. Ever since 39.05 the first time, and it went down, and then I got stopped out, and then I moved on to the next one. Because I have a responsibility to try to do my best for my folks that follow me at 24/7 that I really care about, and I want to make sure I do okay. I'll cover gold in just a second. Boys and girls, when you see stuff like this, I know it's hard to believe that it could be topping, but it probably is. And let me show you something that we got from one of our friends over in the Valley of the Sun over there in Las Vegas, Nevada. Look what happened to the open interest. Let me blow it up so everybody can see it real clearly. Open interest in the NASDAQ, okay, was look at drop. Now, I know it's rolling over. That's part of it. But look, the rollover didn't occur. 8,000 contracts didn't roll over. And we were seeing pretty much the same, much as dramatic as the NASDAQ, but there's not a lot of new players coming in here, folks. And it's just a matter of time until this thing runs into a train. Now, the one thing that I do know is once that train starts, I will be on top of that train. It might take me a couple times to get it right, but I want to do it right. At least I want to. Now, I did get rid of the gold. In fact, when I sent this out last night, I said, gee, maybe I shouldn't have done this. But then the more I thought of it overnight, I said I have to do it. Now, what I was doing if you look back into late February, the market rallied from 1765 up to 1815. That was a little more than $50. And this one here rallied from 1673 all the way up to 1739 last night. And I suggested that 1728 is where we're going to exit the long position, and then we're going to look to buy it on the retracement. And the problem is, if that retracement doesn't come, I'm going to have egg on my face. But fortunately, I keep hollandaise in the refrigerator at all times so I can have eggs Benedict. So not a problem. But we're going to be we are out of the gold, and now we're looking to see what happens on the second turn of the knob as we go through some of these others. So remember, we have Norm Winsky coming up as our guest, and I think it'll be a lot of fun. Oh, no. I'm not getting data. Shut the front door and raise the rent. God bless America. I will be right back, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, by the way, I want to mention that it's going to be a time change. I'm going to start doing the show at 12 o'clock New York time every day, starting Monday when we change times. And that'll give me more time to prepare the stuff that I need for the 24/7 folks early in the morning. And we'll also be doing the usual things that we have on our plate. So let's take a look here at one of the other markets that I think is very, very interesting here. And one of the another reasons why we lightened up just a little bit. We lightened up everything in the gold, but I wanted to show you this is the platinum market. Now this morning we did get up higher. We got up to the 50% retracement up there around 1230, but that didn't have anything to do with the way I covered the gold position. And believe me, folks, when I do that, that's a huge move, folks. You stop and think when you pick up 50 some dollars in gold in just a matter of a couple days, that usually doesn't happen. And what I was thinking about is the last times that has occurred, as you can see on that past chart that I posted, that market reversed quite a bit and gave some of it back or all of it back. And, there's a possibility that maybe this is still a bear market in the gold, because just because we have a $55 rally doesn't mean this is the beginning of something big. We know that the 1673 that's down there is flat out etched in stone. We go below that. The bear market is still in force in the gold, and it'll go a great deal lower. But right now it doesn't appear that way, but it's still a little bit early. That's all part of planning. Now, we have another market that is very important to us from trading purposes, and that is the Treasury bond market. And if you'll notice here on this 4-hour chart, I'm going to be putting this up here today. We have been in a tremendous bear market. If you'll remember here, back on February the 9th, one of our favorite signals, of course, is that ABCD at the 382. You can see that came in, and we got out of it way too early, but we made a really nice profit on it. We left about 4 or 5 handles on the table, but that trade still picked up well over 4 handles in a matter of just about 2 or 3 days, and that's the kind of trade that you want. And there's another situation where I got out a little bit too early, but the amount of money that I was risking when I got into the trade was so small that the risk-reward ratio was pretty good. So we'll see if that's it. Okay. We want to, let's get one other thing. Someone asked me to repeat this, and I will for just 1 second here. Where is that darn thing? Oh, they wanted to ask, the question was about the margin debt. I want to get that up here. Shut the front door and raise the rent. Shut the front door. Just a second, boys. I got to do something. Hold on just a minute. Oh boy, well, I love it when they're rocking and rolling, baby. Folks, the stuff that I saw yesterday in these markets was just absolutely mind-boggling. Here is the margin debt that I wanted to put you up. We were seeing, folks, the volatility is going to get so big. You could see it in GameStop. If you don't believe the volatility is not here and you don't believe in stops, you better look at that GameStop chart, because that can happen to you. If those read-it boys get on to silver, gold, platinum, soybean oil, whatever it is, if they get on that, they're going to push those markets because they can only take so much pressure. It might not last very long, but you got to be prepared for that. I mean, give me a break. I mean, this is something that you got to pay attention to. Now, the margin debt is, I think, 300% higher than it was in 2000. And what we're looking now in the market is something bigger than 2000, in my opinion, but it hadn't happened yet. But when the fat lady sings, look out. You don't want to be anywhere near where she sits down. That's the bad part you got to remember. The bond market, I think, has got a chance. The bottom in here, we've rallied 3.5 handles so far from the bottom, but the open interest is not telling us that the bottom is in yet. The only thing that's telling us that the bottom is in yet was the fact that bond market made a major, and I'm talking about major, pattern on the dailies. If you recall, we brought this to your attention long before it happened. But here it is. We got all the way down. The low was 55 and change. The low was 55.06 or something like that, and that number came in at 56.29. So that's pretty much spot on. That's the ABCD. It's the Gartley pattern and everything. But if we go below 55 now, folks, you're looking at 127 in bonds. Yeah, we could. I don't know when you can believe it. You could get back to 3 or 4% in the Treasury bonds. How is the government going to pay 3 or 4% when they don't have any money to begin with, and they're spending money like crazy? A $1.9 trillion, COVID bill. And it's not COVID. Only $600 billion goes out to the people that need it the most. The rest of it is, fiscal stuff and things that are, really not necessary. But hey, that's, and that's the life we live in. All right, now let's move on to one other thing that I want to mention, and that is the Dow Jones Transportation, folks. I want to show you that this is the old one, but we absolutely shattered this old 3-drive pattern right here. We just went nuts to the upside this week. So this pattern has been shattered, as it should, because the Dow Jones made all-time highs, the NASDAQ didn't, and the S&P didn't, much like what we did in 2000, only the reverse. And where are we? We're right in March, where we were in 2000. So pay attention. It's trying to tell you something, but I've got my ear to the ground, and that I hear the tomahawks playing, but not yet. We'll see what's going on. Okay, let's move on to what was the other one that I had to talk about? Shut the front door and raise the rent. Where did that chart go? Oh, I lost it. Got it. I wanted to talk just a tiny bit about silver. Silver's still holding up, extremely well. It's impossible to buy rounds almost. In fact, they've raised the premium on those things that I've heard as much as $8 a coin for the silver rounds that the government puts out with the eagle on it. I mean, they're beautiful coins, but to see that big of a premium, unbelievable. I mean, that is really unbelievable here. We'll have Norm Winsky coming up at the break. And tomorrow, folks, we have Jerome Bressert Walt Bresser's son. From those of you who've been around for a long time, remember him. Others don't, but he was one of the original cycle guys. He had Hal Commodity Cycles. Hal stood for his, I think it was, Hal was HAL was for high and low, and he had that service for a very, very long time, and he passed away about 6 to 10 years ago, maybe 6 years, over in Las Vegas, and he got early Alzheimer's, and he passed away very quickly after that. But anyway, his son is on. He's been around forever. He's 55 years old. He's got a great deal of experience, a super nice young man. He was involved with Russell Wassendorf over at PFG during that time, as was I. And he was hurt far more than I was because all of his accounts, which were considerable, were hurt. All right, listen, we're going to take a break here. We'll have Norm Winsky back.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
try to get in touch with Norm Winsky. We're having a little bit of technical difficulties, but I did want to start this out by showing you what we're looking at here now. This is going to be a very important day in the gold market, folks. I'll show you why. This is what the AI, the Artificial Intelligence Program, has been telling us. What's going to happen today is that we should bottom around 1030. And now we're down $17 right now from the high. Oh no, $20 because the high was $17.39. So there should be a pretty good bottom here around 1030 in the gold market. Now, my original plan was to get out at, well, we got out at 1728, and I said to buy the first 382 retracement in this. Unfortunately, the 382 retracement is way lower. It's down around 1705. But if we're down there, the 382 retracement around 1705 at 10:15, which is in 45 minutes, that's when you might want to pay close attention to, because these programs don't always line up perfectly, but when they do, you have to pay close attention to them. So that's what I'm watching here in the gold market this morning. And I'm bullish long term, of course, as long as we stay above 1673. But if it doesn't happen, then we'll move on to something else. I would like to, since we're not able to get to Norm, I want to take a couple of minutes here to take a look at a couple of cross-rate currencies that are very interesting. Now, most of you know that we put a position on. Oh, I hope I have that euro position. Where is it? Oh, shut the fuck door. Not good. All right, let me show you something in the bonds that we hit last night. This is the pattern we had in the bonds last night. We got almost to the 61% retracement. We didn't quite get there. We got to 58.27, and we backed off a little bit below 58. So that did complete that small three drive to a top pattern on the hourly chart. But we've been rallying now for 6 days, so we're scheduled to have a pretty good correction, because this is nothing more than a rally in a bear market. So that 58.28 to 159.05 should be very strong resistance, and we should get a pullback down to about that 157, 156 level in the Treasury bonds, if that is in fact what is going to happen. But again, I'm not sure what's going to happen, but no one else does either. So just give me 1 second here. I want to pull up a couple of cross rates that I want you folks to take a look at. Hold on just a second. What did I do with those things? Oh, where are they at? Here it is. Hold on now. Just give me a second. We're going to take a look at a few of them. One of them that we're going to pay attention to, of course, is this euro. That's been very, very good to us. And what we've been able to do is to buy it and trade out of it. We're back short again. And I wanted to do the dollar index, and we'll get it up here for a second. It's followed just about as perfectly as you possibly can. There we go. Put this up here. Here is the dollar index, folks. You can't make this up. You got another ABCD pattern here, right up to that. It went to 97.50 was the high. 92.50 was the high. 92.27 was the predicted high, so it was 20 ticks off. It's now almost 100 pips below that, and we were able to, buy it and sell it via the euro, and so it's been very nice, folks. The euro is by far the easiest thing you could ever trade. Hands down. It hardly has any spikes. You'll have one or two with the ECB or the Fed or something like that, but they're always in control. That's $1 trillion market, folks. Stop and think. They trade $1 trillion in that stuff every day almost. I mean, it's just amazing. And remember, folks, 1 trillion seconds is 37 years. Just to give you an idea how long that is and why that trillion number is so very, very important. I mean, it's really hard to believe. It blows me away, and nothing ever, surprises me. Another one that's very interesting here on the time chart here is this year Japanese yen chart versus the U.S. dollar. If you take a look at this one here, we've had a huge break. We went below the 61% retracement now. We're now trading down around 92.40. And so this is a weekly too. So this has been a pretty substantial drop. It's incredibly oversold, which just the opposite of the stock market, incredibly overbought. So those are lining up also. So I think that's an important thing to pay close attention to. And then, of course, the one that we've been doing quite well in, which is that British pound. And it's down to that 139 level. We'll get it up here to take a look at it here. And you know what we should do here with this British pound is, because we're waiting for a retracement. Let's just double check this right now. Here we'll go to a 30-minute chart. We're coming up to it pretty close. Here we are. Just 1 second here. Boy, we are close. Boy, I'm drawing in the pattern, folks, so bear with me here. We're very, very close here in the British pattern. Hold on here. We'll get this up here. There we are. And that would come in around, we're trading 139.49 right now. Right about 40 even will be the 382 retracement again. And that's where you want to take a look at that British pound if you want to be a seller, because it's going to be, this is a bear market right now. And, you want to see if that's going to happen. Remember, we shorted this thing at 141.70. We covered it at 138 and change. And, so this has been a really good one for trading. And these are not crazy, folks. You don't have that was the 30-minute chart. And you can see there's no really wild swings there on these currencies. So not that there can't be, but not compared to what's happening to GameStop and some of these others, baloney. Bear with me 1 second, folks. My mouth is getting a little dry. We got the old flu allergy season coming in, but I'm all prepared for it. I finally, oh wow, excuse me. We have to look at one other on this program that I think is really important here for the currencies, and it's the Australian dollar. And for the life of me, I can't find the darn thing. Where is it here? 1 second, and I will get it back. I got to lay it out again, and we'll get it ready. Where is that Australian dollar? And here it is right here, because this is another one that is priming the pump for a new move down. And let's get this up here so we can take a look at it. I know most of you guys, my water is really water. Johnny Carson didn't drink. I don't know if you know that or not, but we used to go to the Tonight Show all the time because the producer lived on our block, the guy that was the main producer. So his kids went to school with my kids, and anytime we needed to go to see that show, which we went 3 or 4 times a year, we had what we had carte blanche. It was fabulous. Got a good one, boys. Got a good one here.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, evidently Norm has got technical difficulties today, so we can't reach him. So what we're going to do is we're going to do a little replay of the service we do for TFNN 24/7. Folks, this is it. I mean, this is Mother God and Country. I've posted up that daily chart of the Australian dollar. You can see we had a big top. The markets broke badly. It has rallied for 3 days, exactly at the 382 retracement. What you're looking at here with that dark black line shows you the retracement at 382. Then what you want to do is go down to the hourly chart, very easily to do that. And what you'll be able to see is what's happening here is there is a perfect 382. It's exactly perfect. Now, all you have to do now is risk above that high. That's only 20 pips. But folks, remember, we were just talking about this just a little while ago. So pay attention to these things because they don't work all the time, but they work more often than you might think. So here's that same pattern again. If you want to take a look at it, there it is. Here it is in the Treasury bonds. Way back there in February, and there it was again in January. So it's that same pattern, that ABCD in a down market. But when you got to 382, you've got Mother God and Country on your side. Most of you folks don't know this. You know what the square root of 382 is, folks? 618. Very interesting. Anyway, that's why that one's so important. You don't have to risk very much here. And the profit objective on this thing is, oh my God, it's over $3,000. So you're risking $250 to make $3,000? I mean, where do you get those kind of odds? You shouldn't get those odds in Las Vegas. No chance. Absolutely no chance. Okay, let's move over here. And I wanted to bring up a little thing about the Russell. Let's get this up. This Russell has gone wacko again. Let me just get it up here. We did, I think we're right up here at a double top here in the Russell today. Hold on just a second here. So yesterday we didn't make it. Did we make the double top? Yeah, I think we did. Here we are making a double top here in the Russell. And, of course, the Russell is the second best to trade of the stock indices. S&P first, Russell second. Third is the NASDAQ, and fourth is the Dow Jones. The Dow Jones, because it is the lowest of the open interest, and also it's only 30 stocks, and they're price-weighted and not cap-weighted. Of course, the S&P has not made a new high yet. That's up at 39.56, but we blew the top away in the Dow Jones Industrial Average. We're making that 1.618 expansion number on the long-term daily, and whether that means anything or not, we'll have to wait and see. But when we're ready, the old cowboy will put on his cowboy hat and his chaps, get on his trusty Burrow Walter, and we'll go out into the charts to find a nice entry point if we can. You cannot find a better entry point than what I just showed you in the Australian dollar, folks. I mean, that's just absolutely perfect. It just doesn't get any better than that. That's my 2 cents worth here. Someone's asked a question about the gold market. Where do I think it's going? I really don't know. All I know is the fact that we've broken now. It's only taken a few hours to drop from 1739 down to 1720. That's a $19 drop. And the reason why we got out of the market at the 28 is I wanted to book profits. That's we've seen this many times before where we've given back quite a bit, and when people send me emails and tell me, "Gee, that paid for the down payment on my house. I got a new car. We're able to buy 2 dozen eggs instead of 1 dozen eggs." I mean, that makes a lot of sense to me to book some profit sometimes. I know the old adage is you can never go broke making a profit, but boy, oh boy, you can never make a really big moves unless you get moving. The old high in the Russell was at 23.16, and so far we've been to 23.08, so we're 8 points away on that, but we should be able to make it easily. I don't know if I posted that. Just give me 1 second here. There we go. Mr. Bill says, do I have a rhinestone vest? Was I right? Nope. I wear the leather jacket, my chaps, and my 10-gallon Stetson, and that's it. So we'll see how these markets end up here, but we're in an area where you're seeing volatility. When you see volatility like you've seen in GameStop, that means something, folks. That means there's players in the market, and they're moving markets, so you've got to be very, very careful so that you don't get involved in some of that stuff, and that's the main thing that you got to try to remember. I hope that helps, but eventually, we'll find out. Give me 1 second here. I have to do one other one that I wanted to show you, and if that's just 1 second here, if I can get it here. Whoa, that is the crude oil market. Let's just get this up here to take a look at it here. 34.93. Oh boy, isn't that a beauty? Okay, here we are. This is the crude oil market, because we were expecting a 3 drive to a top pattern than this, and it certainly happened. Folks, you couldn't get me on a burro if you paid me $50. I'm so far from being a cowboy, it's unbelievable. Anyway, that's the main thing here to pay attention to. Okay, here is same situation in the crude oil like we're having in the Australian dollar. We just had that 382 retracement again. That came in at 65.16, I believe. The high was 65.66. We're now trading at 64.79. And if we break below that 63 level, we'll be looking at $60 oil. That'll be down more than 10% in a week. And if that's not an indication of a major top, I don't know what is. So that's something that we've got to remind ourselves of this. It's very important. Give me 1 second, folks, to check the board. I've got to catch up a few things because we're at real critical time now, and I'm missing a couple of things, and I want to be able to catch up with those. So 1 second, and I'll be back in business here. Hold on a second. Back to here, over there. Okay, here we are. Okay, what did we do here? Wow, we're having a nice run here in the Dow Jones again. That's very, very good. All righty, the gold got all the way down to 18, so we think that's okay. Where are we at here? Did we get, so we just missed that one. Okay. All right. Let me do one thing at a time here so that I can make sure I get this stuff straight. We did that Euro trade, folks, and it worked out really good. Let's just get it up here to show you what's going on with this. This is the same type of pattern. I'm going to show you. We went long and then we went short again because we had a perfect ABCD. So let me do this. I think on the hourly basis, I think I probably got this marked up already. Yeah, there it is. Here you'll be able to see. Hold on 1 second. Get rid of the lines in here so you'll understand here where we are. And oh shucks, hold on just a second here. I hit the wrong button. All righty, there we go. We made a 382 retracement today up there. We bought it down there. You remember yesterday at 118.70. There's a perfect Gartley. We went all the way up there. The profit objective was 119.50. We went short there. The ECB came out and did something. The market went against us by about 10 pips, and now it's in our favor by about 30. So we'll see what happens. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey, folks, I have to make a correction. We've got, first of all, it's 31,000 years, not 31 years, not 32 years. It's 31,000 years to make up 1 trillion seconds. Thank you, JK, for bringing that in. We've got Jeff on the line from Philly. What can we help you with, young man?
Hi, Larry. So we're in futures rollover on a few futures today and tomorrow, and I had an idea. I'm sure I'm not the first one, and there's probably some reason why this won't work, but I thought I'd run it by you. So let's say for any futures, doesn't matter which one, you happen to know that the majority of the open interest was short, so that in order to roll over, those investors would have to buy back their short and then short again in the new month. So there should be buying pressure in the current month and selling pressure in the next month. Couldn't you buy the current month and sell the next month as a pairs trade? Take advantage of that?
Sure. Yes, you can do that. A lot of people trade that up till the last day. That's certainly possible. And when you have a really wide discrepancy, like in backwardation, like you have in silver and some of the other commodities, yes, that's absolutely possible. But it's wise to watch the open interest, especially when you're at new highs and new lows, because that's a really big tip-off to see if there's new players coming in. A perfect example now is we're losing players in stock indices, and we're gaining players in the bond market that's been in a tremendous bear market now for, well over 7 months. So that market appears to me hasn't bottomed yet. But open interests are rather tricky. I basically keep it as simple as I can and, look for the bar charts. But I do watch the open interest each day.
Can you see, what percentage of the open interest is short on maybe like CME Group or somewhere else?
Oh, well, no. For every short, there has to be a long. So, in order to find those figures out, whether the large traders are long or short, you have to get to that report. I don't remember what they call it. Commitment of Traders.
Commitment of Traders report?
Yeah, if you get the Commitment of Traders report and look at that, to me, that's hard to understand, all those different stuff they got there. So, there's a service that they have. It's a very good one. But, hey, thanks for calling in, Jeff. We really appreciate it.
Okay. Thank you.
Thank you. See you tomorrow, folks.